This is the Sattler Five.
And in business, the stock market fell through the floor today.
The stock market report.
It's hard to know where
The stock market went through the roof today. No one seems to have predicted this.
With Kevin Johnson.
And we cross now to Kevin Johnson from Argonaut Securities for an extended look at the market. Kevin, you've been away and now you're back. What's happening?
Well, while I've been away, things have been improving and picking up, which I'm very happy about. The index seems to have established itself well over 5,500 at the moment, and today, for example, it's 5,640. And really, I think I put that down to the central banks of the world always, no matter what's going on, coming out and saying, we will do whatever it takes to keep things stable. And also a realisation amongst investors that interest rates are staying zero or low for a period of time as well.
Okay. So people are feeling more confident, you feel?
Well, I think so. Depends where you live, I suspect, because there's certain pockets of the economy still aren't that strong, and I think parts of Western Australia are certainly in that situation. But yeah, I think so. The framework is there. A lot of the issues are out of the way now. We've had our own election behind us, the UK Brexit things behind us. Obviously, we've still got the US election coming up, but yeah, everyone can pretty well see where that's heading at the moment. So as a general rule, yeah, I think investors are more confident. At the same time, they're just looking for direction. We're going to get that the next few months with the reporting season underway for Australian companies. So I think, yeah, I'm very comfortable where things are heading.
Yeah, that sounds good. That is reassuring. What about, superannuation, where people should be, where are they supposed to put their money?
Well, unfortunately, they're at the mercy of the central banks, or in our case, the Reserve Bank, because they keep reducing rates down and down and down, which doesn't help anybody that's an investor if you've got surplus capital. So there's no easy answer to it. The high-yielding stocks are all very highly priced at the moment, but given where interest rates are, they're probably reasonably priced.
Mm-hmm. What advice would you give to people looking at the market as it is today?
That's a very good question. And frankly, it's one I get faced with a lot. I think you have to be selective. I think you have to be a stock picker. I think if you're not involved with the market, I think you may have left a little bit late because now is not the time to go rushing in because it is high. The index, historical terms, is reasonably healthy at the moment. So I just think it's a thing that requires analysis, and I think we'll have a much better view by about September when we've had all the profit results. We've seen how the companies have dealt with the downturn in the economy we've seen in the last 6 months and the uncertainty of Brexit and the Australian election. And if their balance sheet's sound and their profits sound and their dividends are maintained, then you can confidently buy and own those sorts of companies. And that's all will be, dare I say this, all will be revealed in the next 30 days.
In the next 30 days. So people should just sit tight until September.
Well, I think if you're holding stock, you definitely have to hold. This is a period of time to hold shares, not necessarily to buy or sell them. I think if you're thinking of buying, then I think you need to be getting advice. You need to be monitoring the profit results that are coming out, because out of them will be some pockets of gold and out of them will be some very average ones as well. So there's a time to be monitoring the market, not being asleep, and then come September, get yourself set and then just ignore it for 6 months.
Okay. Well, if people are going to wait until September, what stocks would you be looking at for your clients?
Well, we've been very keen on the gold sector and we've been watching very clearly the gold results. Now, there's not a lot of value in the gold sector, but I like the price action in the gold price. It's stabilised very strongly at over $1,300 an ounce now. In Aussie dollar terms, it's still nearly $1,800 an ounce. So I think that's an area I think where there's still good opportunity for people. And we see that in the likes of Regis Resources, Gold Road, etc., Dacian are all stocks that Argonaut likes a lot.
Mm-hmm. We've mentioned them before.
What's that?
I said we've mentioned them before.
Yes, we have, yeah, and Northern Star is another favourite of ours. These companies are generating cash and increasing their dividends. It's always what we look for when we're looking for a good investment.
Absolutely.
Is the company making money? Is it paying dividends? Has it got a good balance sheet? And gold shares do provide that.
What about
bank for it?
Yeah, you do pay for it, obviously, because they're sitting high.
Yeah.
What about bank shares?
Yes, I think they're an interesting, not necessarily predicament's the wrong word, they're in an interesting position at the moment. They do provide very good dividends. There is some question marks and analysis suggesting that some of those dividends may come down a little bit, but I think the reaction to that won't be as dramatic as what people expect. Interest rates on the banks are very high, or the yields are very high, and frankly, even if they lower their dividends by 5 or 10%, it's still a very good return.
Mm.
And, the banking sector in Australia is very well protected and very well managed and very well capitalised. So I think that certainly is an area of interest. I mean, some brokers and investors and analysts are trying to build up this sort of fear factor around cutting their dividends.
Mm.
But dividend cuts will be very marginal.
Yeah,
It's going to be an overreaction. That'll be a good buy opportunity.
So if you're sitting with bank shares, sit on them, don't do anything. Just
Absolutely. They're the gold in your portfolio because they do generate income.
Mhm.
Property trusts and banks and good quality industrials like Wesfarmers, they just keep printing money and managed well and sending you dividend checks, and they're the shares you do definitely want to hold.
Right.
Don't get caught up in the panic or the negative headlines. They're core parts of your portfolio.
They certainly are. So it is just a matter of proceeding with caution, isn't it?
It is at the moment. Like I said, the index is high, so it's not a time to be buying, but don't be panicked into selling by someone saying because it's high. That's not a reason to sell a share.
No.
The reason you sell shares is because you're not happy with the manager or the direction or cash flows or something like that. Just because things are high is not a reason to sell.
No, truly. Unless you desperately need the money, but you still wouldn't want to do it.
That's a different proposition altogether. If you need the money, you need the money.
That's so true.
You take it then. Don't put
Exactly.
yourself under stress. And try not to borrow too much.
Sounds like a good plan. Kevin, thank you so much for joining me. If people want to trade with you, how do they get in touch with you?
You can call us at Argonaut on 9224 6888.
Wonderful. Thanks very much, Kevin.
Thanks, Destiny. See you, bye.
Bye.
And in business, the stock market to the floor today.
The Stock Market Report
It's hard to know where
The stock market went through the roof today. No one seems to have predicted this.
with Kevin Johnson. This is the Sattler 5.